Hey guys, welcome to a new video. So what an awesome day to be in the market yesterday. The Nasdaq up almost 1.5%, I think it was. Nvidia up a lot because they crushed earnings. It dipped and then it went up. What else has been up? So we got Hacky up 8%. That's because CrowdStrike had earnings. They crushed it as well. So lots of good things happening in the market. MicroStrategy on an absolute rampage. Look at these. MSTW up 14%, NVDW up over 10%. So we're going to talk about Nvidia. What are the good Nvidia ETFs? What are the bad ones? We're going to talk about MicroStrategy blocks, all the kind of crypto ones that have been crushing it over the last only 10 days. We're going to talk about one very exciting new ETF that is launching, I think, in a couple of days. And we'll just be talking about the market in general. Now, of course, before we get into it, this video is not financial advice. This channel is purely based on my thoughts as I navigate my own personal investment journey. Please, always do your own research. So back to it, a lot of things doing well. Blocks up a few percent, LFGY keeping pace. Chippy, even it's been down, but it's a little bit of a recovery starting. And then the rest not so much. And then we get into the single stock stuff. MSTW, it's up almost at $5, around 473. It was down. This is the MSTW chart here. It was down at $3, what, 10 days ago. That is nuts. It's up, what's that, 60% up? I don't know, something crazy. We'll talk about it in a minute. And like Nvidia had earnings. Now the market didn't react well initially, and then it started pumping. It was ripping. So you've got NVDW, if you see on the right here, up 10.5%. NVII up over 9%. So it's kept pace with NVDW pretty close. That's quite good. That's why I love the NVII ETF. Misty, COYW, a lot of ETFs up. But now I want to first touch on Nvidia ETFs. So now if we just change this to this, so we'll see what happened yesterday. Nvidia went up because of earnings. In NVDW, that's why I love the round hill weekly pay ETFs. It manages to go up. If you buy in fear and you have good entries, then you're obviously going to capture a lot of that upside through the extra leverage, the extra exposure. So it goes up the much 10.49%. Nvidia went up 5.8%. It's a covered call. It's capped. So look at its upside. It's about half of what NVDW did. NVII almost keeping pace with NVDW, but this is probably my favorite because its downside is much more protected most of the time than NVDW. Obviously, NVDW will go up a lot, but it will also go down a lot when you're going down. So it's a bit more risky. And then, of course, you've got the dark horse of the pack, NVYY, the GraniteShares YieldBOOST ETF, which sucks. Look at its upside. Nvidia was up. What was Nvidia up? Like 7%. I don't know. And NVYY, so you got all these other ones capturing almost like 10%, 9% upside, and even a YieldMax covered call capped ETF capturing almost 6% upside. NVYY 1.62%. What is it doing? What I think that YieldBOOST or GraniteShares have said that they've changed the strategy to limit NAV erosion twice in the last since the start of the year, but it's not why. Why is it not working? I just don't get it. And why so many people in NVYY still? Like I just checked the stats, and there's still $30 million dollars of AUM, assets under management. TSYY still has 60 million of AUM, assets under management, and they're so bad. Like it's just not able to capture upside, which means NAV erosion as a byproduct of that, it's just going to happen fundamentally. Like if we look at total returns of these four, NVI, this is over just over a year's time frame. NVII up 80%, NVDW 75%. This is total returns, by the way. So this is share price and distributions together, total return. Nvidia up 61%. So NVII, the Rec Shares one, it's my favorite one, really like it, up 80%. And then you've got NVYY doing half of that, up 35%. And this is total return. When they used to be, NVYY used to pay like 100% distribution rate, and they brought it down. It's paying roughly around 40% distribution rate now, and yet it still can't capture upside. It still sucks. Like, look at the um, price change on it. Look at that. Why are people still in this? Look at the NAV erosion. This is the green one, NVYY. It's down 53%. Nvidia's down 15% because obviously YieldMax, they pay a lot. YieldMax, like they're looking to pay a lot of money. The distributions are high. NVII is the only one without NAV erosion since in that 1 year kind of time frame. NVDW down a little bit, but it's still got a very good performance. That's, it's not too far off kind of flat NAV. We're down 53% NVYY. Like, it just doesn't capture any upside. I just don't get it. So anyway, just thought I'd share this. If you're in any YieldBOOST ETFs, maybe look to get out of them, or let me know why you're still in them. Because it seems like they've been trying to address the NAV erosion problem, and that's what people have been, on at them about. But they've changed the strategy twice in the last year, but I don't know what they've done because it's not working. It's just like, look at that. It's just gone down and down and down. There's a tiny bit of upside here, and then nothing. Look at this upside. It's got nothing. Just don't get it. Anyway, so that's Nvidia. So I would stay away from that. I love NVII, and a beautiful little price action yesterday off the back of Nvidia earnings. Now, the other thing is Bitcoin and crypto over the last 10 days has been absolutely killing it. It's been on a rampage. And what's been crushing it the most? MSTW, up almost 60% total return in 10 days. 60% in 10 days. And that's what happens when you just buy, if you were buying during the fear, during that kind of peak of the bear market, instead of waiting till October, as I know a lot of people are waiting till October based on the 4-year cycle, but you can miss out. It's just the most simple strategy is to buy in extreme fear when there is a lot of noise around micro strategy and the fact that, it's a Ponzi scheme, it's $80, they're going to get liquidated. That's usually kind of a signal, in my experience, that nearing a bottom, not saying it's a bottom, we can't time bottoms, but in extreme fear is when I'd be getting into these. So, I mean, it's not, and I'm not saying that we're in the clear, we're out of the woods, we're through this bear market, and we're going to ride into a bull market, because we might not. We might go back down to 60, we might go down to 50. I don't think we'll go lower than that, but we could, right? No one knows. No one has a crystal ball. But the point is, it's just keep things simple, buy an extreme fear, and just buy when everyone is against. When the sentiment is so bad, but you still believe in that underlying stock or ETF or whatever it may be. So Misty, obviously not capturing as much. Coinbase up 30%, or COYW, the round hill weekly pay leveraged ETF of Coinbase, up 36%. These are in 10 days. Like these XBCI, that's the leveraged Bitcoin play. BTCI up 16%, and then your BLOX, LFGY, and SEPI. And someone mentioned, the fairer comparison of blocks. Instead of my last video was kind of talking about blocks NAV erosion, X funds NAV erosion, and kind of comparing blocks to BTCI and XBCI. But I think, as someone else mentioned, the fairer comparison is against LFGY and SEPI. And someone also stated that, blocks is losing to SEPI over the long term, and that is correct. But for me, blocks has way more potential upside. Like blocks going into a bull market is going to crush SEPI, in my opinion, from what I've seen. Like SEPI just doesn't really capture that much upside. It's got a much better downside protection. So if you're buying kind of in the middle or near the top, SEPI is going to be better for you, whereas you're going to get hit a lot harder with blocks. But as we go into a bull market, if we do, then blocks is going to perform the best. And LFGY might keep up a little bit, but I think blocks will outperform both of them, and it's specifically SEPI quite convincingly. Blocks, remember, only rotated into some of these crypto ETFs like last Friday, so it's really just a week. I mean, and that's the problem. that's both the opportunity and the problem with actively managed ETFs. They're not always going to get it right in terms of the holdings and the exposure, but I still think that you buy blocks during fear and extreme fear, it will do extremely well when we come into a bull market, as will MSTW, as will COYW, as will HOOW, in my opinion. That's why I like the round hill leverage weekly pay ETFs, because I like to buy down deep in the bear market where we're in extreme fear and ride it up. It's very simple. It's quite hard to do. This is my blocks position. I'll just show this as an example, because I bought this. It's a very small position, and because I couldn't help myself when we were in extreme fear during that kind of peak extreme fear around March 30th time, of when we were having the conflict with Iran. There was bad sentiment in the market, and I pulled the trigger at 1260. This dotted line is my average cost price. And you'll see that, look at that, it's kind of like a line of support at the bottom here. So that's my average cost price. I bought it in extreme fear, and now I just wait. Now, this position is in a total profit of 28%, capital gain of 13%. So that's why for me it's so important to be buying during fear, extreme fear, extreme fear, extreme fear. That's the only time to buy any income ETF, in my opinion, because as you know, NAV erosion is a thing, and all income ETFs can be susceptible to NAV erosion, especially if you're buying up here. Like you'd be down a lot. So that's my kind of thought process on it, and I believe that blocks. I wish I kind of had more in it, but already had quite a lot of exposure to Bitcoin and crypto income ETFs when prior to this year, and so this is like one of the only ones I've bought this year. But I believe that this will, this should be 100%. If we go into a proper bull market, I'm willing to just wait and wait and wait. If it's in the end of this year, 2027, whenever it is, I think it'll be at least 100% total profit position by the time we get into it. And it's just, that's all it is. Buying extreme fear, wait. We're chilling now. What are we in now? We're in a fear and greed index score of 58. We're in greed, so we're chilling. We chill in neutrality, sort of, unless you want a DCA. We chill in greed. We chill in extreme greed. We start buying in fear, and we deploy very heavily in extreme fear. And that's all I do. It's a very simple kind of process, a way to do it. Sorry, I lost my position there. But it works very well for me. I've only been doing it for the last 8 or 9 months, like to keep very regulated to this defined strategy. And pretty much every position has been doing extremely well based on using this very simple but disciplined, defined strategy. So yeah, I think blocks will do extremely well, but we will see. But it's great to see crypto having a bounce. Like I said, I don't know if it's going to continue. Obviously, they're all up. SEPI is down, is up the least because it's got the least upside. I would think about, as we go down, if we were to go down again, I would consider, if you were in SEPI, not financial advice, getting out of that and getting into something with more upside like a blocks or something else. But of course, not financial advice. Anyway, just thought I'd share that. And then what else? What else has been happening with? So these are some of my favorite basket income ETFs, some of my favorite high yield ETFs in the space. And actually, if we look from low, so like end of March to now, because that's when I'm buying, that's when I was buying the most, March 30th, April 1st kind of time, till now. Well, Chippy is still strong at 55, but look at Hacky. It's almost the same as Chippy. How good is the Hacky ETF doing? Up 53% total returns since the 1st of April. Very good performance. GPTY up 44%. I did a video on that where that came out extremely well, GPTY. Very interesting to have GPTY and Chippy, two YieldMax ETFs, kind of crushing the competition if you look at it like this. And, lots of YieldMax haters out there, but I really like the portfolio basket income ETFs that YieldMax have. The ones like Chippy, GPTY, Miney, LFGY. I really like them. I think they do well. The numbers speak for themselves in a way. I really like GAX and TDAX. You see them with 33%, both there. So they're kind of two of my core kind of positions, income ETFs. I don't have a huge amount in them at the moment, but they will be, as I continue with this strategy, there will be 2 of my core income ETFs. Excuse me. EGI, really good as well. It's much more volatile. If you're buying at the right time, it does extremely well, but it's also tied to a lot of memory stock exposure and holdings, and that hasn't been doing so well since kind of we had that big rally in memory stocks. Hasn't really recovered since, as you'll see from DRMP, down 16.69%. I don't hold DRMP. I don't hold any of the memory stuff because I already had a position in Micron, which I was up quite a lot in. I think like 600-700%, and that scared me a little to get into memory when it already rallied so hard. But let me know if you hold DRMP, if you're going to continue to hold it, if you prefer Dreamy. We've obviously got the new one come out from YieldMax YRAM that I talked about in the last video. SPCI is not great either, miney, but I think metals and mining, I think that will do very well as if we continue with kind of debasement trade and if metals continues to do well. So interesting. Let me know what you're holding, what you're looking to buy. If you're just chilling, as we're in this kind of greed situation, seems like the market's doing pretty well at the moment. So I'd love to hear your thoughts on what you're doing, how you're positioning things, what your strategies are. And then lastly, we've got a new ETF from X Funds. I know some people in those comments, people are not happy with the X Fund strategy or Jay being part of the strategy, part of the team. It's interesting. Yeah, I get it, but with BLOX and GX, I think they'll do well. So I'm happy to, as long as they got the right people in the right positions who are the experts doing the work, I'm okay with it. I don't know. Let me know your thoughts. Anyway, VOOY from X Funds, very excited about this. So VOOY is designed to carry, equity, but they're about to. VOOY is designed to carry both the X Funds large cap income ETF pairs large cap US equities with a flexible, actively managed option strategy that adapts to market conditions rather than relying on one fixed approach. So kind of large cap S&P 500, but I think it's almost time to VOOY and chill. Launch is now September 2nd, just a couple of days away, and this is going to be one to keep an eye on. This could be the oval killer. OVL from Liquid Strategies. It's been beating the S&P 500. It's been absolutely crushing it pretty much since inception. And I think that's why X Funds are releasing VOOY, to kind of compete with all that money, that investment that's going into OVL. And it'll be interesting to see how this kind of lines up, what the distribution rate is. I don't think it's going to be too high, maybe 15-20%. Probably not higher than 20%, actually. Probably more like 15. I don't know. Let me know what you think the distribution rate will be for this. But I'm very excited to see what this will do, equities and income. So excited to see how this does in comparison to the likes of OVL from Liquid Strategies. Anyway, guys, I'll leave it there. Good day in the markets, exciting stuff. And I will see you in the next video. Cheers.